The 2008 crash was one that scarred the entire economy, and recent events have only managed to remind of that time that we would rather forget. The truth is that many people dread a crash like the one that occurred in 2008, but unfortunately, when it comes to real estate, there are no crystal balls to lead the way. So it's easy to be caught off guard. But thanks to reports like the UBS Global Real Estate Bubble Index from October 2022, at least we know that 2023 is highly marked to look bad for both current and future homebuyers. The global real estate market is suffering from more and more interest rate hikes by national banks around the globe, and voices are being raised that 2023 will see the biggest real estate meltdown in decades. If you're interested in real estate or even own a home and don't know what to do now, you've come to the right place. Stay until the end of the video and you'll learn more about the current situation and why it may not be wise for everyone to buy a home in 2023. But what is a good investment, in any case, is to subscribe to Ape Finance to be prepared for more uncomfortable situations to come. So, let's not waste your time and start right away with a short overview. After years of underinvestment and limited supply, housing prices in the United States skyrocketed by an astounding 45% between January 2020 and September 2022. This also happened in other parts of the world. An increase in the number of jobs that can be performed remotely drove increased demand worldwide even more. MBA experts say home prices will rise by 3.1% in 2023. So, the current market places prospective homebuyers in a difficult position, as housing prices and interest rates on loans are historically high. Once more, analysts anticipate that housing prices will continue to climb, although at a more moderate pace. CoreLogic forecasts that over the course of the next 12 months, the average price of a property will rise by 5.6%. If this turns out to be accurate, a property that costs $400,000 now would cost around $422,400 a year from now. In general, many other assessments by experts are that the crash for real estate, despite the high mortgage rates, is not about to happen, and there will be, at most, small corrections like 5% locally. This means that an exceptional situation like the one in 2008 is unlikely to occur in the near future. So what needs to be taken into account is the changed situation due to high real estate prices combined with the high mortgage rates. These can significantly reduce the sector's return for the next few years. You may now be wondering where the sell-off in the real estate market is and what you should do with this information. We now present 5 pieces of advice that will help you avoid making unwise decisions. Number 1. Consider the long term. It is better not to buy real estate now simply for the sake of capital gains. 2023 may not be the period, for instance, to purchase a home for $300,000 with the intention of selling it for $400,000 after a short period of time. You should consider buying a property you can rent out in whole or in part to ensure a positive cash flow. You should take advantage of the high rental interest rates so that anything you buy will put cash in your pocket over the long run, and so that you may develop passive income that is mostly exempt from taxation in many countries. It is believed that toward the very beginning of 2023, a large number of prospective buyers will come to the realization that interest rates are getting close to their peak, that inflation will have reached its peak, and that the Fed's efforts will slowly bring it under control. As the real estate market progresses, it is inevitable that at some point, purchasers' greed will triumph over their fear. This is a natural progression of the market that must always be expected. Strategic investors will capitalize on the chances that our real estate markets will rise over the course of the next couple of years. Number 2. Do not panic sell. The real estate market has already seen several crises, and in the end, it has recovered each time or has even risen higher than before the downfall. If you currently own a home, have a reasonably low interest rate, and do not have an immediate need to sell, it may be smart to wait it out in your current location until markets begin to lean more in favor of sellers before you consider selling your property. Even if it is not clear how the current interest rate environment will change in the coming months and years, you should not sell your property in the heat of the moment because of this, but only if you have an urgent reason to do so. Number 3. Houses can be a liability. Another point to consider is that a home can be a burden in a labor market that is always shifting. In the event that things go badly for the real estate market in 2023, it is a big risk to settle down somewhere in a property if your current job or income is not 110% secure, especially in these times of uncertainty. The truth is that the real estate market in 2023 poses a significant danger. It could take you years to sell the house you acquire because property investment is not a liquid asset. Or worse, you could end up losing money, which can be difficult to recover considering how, after a decade, prices have done nothing but go up. Number 4. Be prepared for high mortgages. If you've been looking for a home recently, you've gone through a lot. Perhaps you were keeping an eye on the market in the hopes that the skyrocketing costs would start to level down. Of course, they have already, but between 2021 and 2022, the rate on a 30-year fixed-rate mortgage more than doubled, rising from under 3% to over 7%. The arithmetic for a $600,000 property with a 10% down payment on a 30-year fixed-rate loan is as follows. The interest payment would be $2,500 per month at a rate of 4%. The payment is $1,100 more at 7% or $3,600. If you currently own a home, you need to be ready to have enough cash on hand to prepare for the upcoming events so that you won't be forced to evict from your home unexpectedly once something unplanned arrives. Therefore, pay off your debt to feel less stress and keep in mind the potential consequences of not doing so. Number 5. Opportunity costs. Opportunity costs are potential benefits from other investments you can miss out on when investing in an alternative like real estate. When it comes down to buying a house, the decision is not one to be taken lightly. Buying a house will impact your life. Whether this impact is positive or negative depends on the situation under which you buy the house and a combination of potential factors in the future financial market. That said, before you jump in the home buyer's pool, you need to know that there is a lot more to benefit from not buying a house now. For one, you stand to pay a hefty mortgage for the majority of your life, and that alone could cripple your future plans and send you into bankruptcy if you don't plan your finances well. Everyone's situation is always different, and you need to consider the opportunity costs before making that big purchase that will change your life. Now, all of this may be a bitter pill to take, but it is preferable to making a decision regarding your finances that you will come to regret deeply. Do you already own a home, or are you considering buying one? Write your experiences in the comments. We hope you enjoyed the video today. If you want to know more about current events, click on the linked content. So, subscribe to Ape Finance, and we'll see you in the next one.